good to get applause before you actually deliver. I appreciate you all being here today. Thank you for having me. I've had a wonderful time in Romania the last couple of days. I'll just sort of leave the story at that. But I'm here to talk to you today about product market fit, the path to find it, what it is, why it matters, and why GrowthX is focused on it. The reality is that in today's market, most seed stage funded companies in Silicon Valley fail, not because they can't build products, but because they can't build markets. Yet most of us remain focused on building product, when in the age of applied technology, where it's never been easier or cheaper to get a product to market, it's also never been more difficult or expensive to get traction for that product in the market. So GrowthX was founded by myself and some other ecosystem guys that were all serial entrepreneurs turned investors, turned frustrated investors because our companies were failing, once again, not because they couldn't build products, but because they couldn't build markets. So we set out to solve that problem for ourselves, by building a market development-focused accelerator program inside of our fund that was wholly focused on finding product market fit in the most capital-efficient way possible for our portfolio. As a result, we learned that we could reduce the failure rate. We also learned how to develop a system whereby we could earn additional equity from our companies in exchange for helping them find product market fit. Unlike traditional accelerators that are focused on developing products and raising money, ours is focused on developing markets and making money. A novel concept, I know. We also developed and launched GrowthX Academy as a way to develop the talent to work in these companies that are non-technical in nature, in areas of sales, growth marketing, growth hacking, UX design thinking, data science, the areas that move the needle on the market side of a business, not necessarily on the product side. We invest in SaaS companies that are capitally efficient and highly scalable, with founding teams that care more about our help than our money. And that's our value system. We also work with large corporations and governments to help them develop accelerator programs and business models that are sustainable so that they can do the best of what we do in Silicon Valley. In the age of applied technology, as I mentioned, it's now a general requirement for you to demonstrate that there's a path to product market fit before you can get seed stage venture. The first time I raised money, we built an MVP on $8.3 million just on an idea 20 years ago. I could build that same product today for about $200,000 US. Why? Because most of the infrastructure exists. So as a result, venture capitalists like myself are taking the same pile of money and we're spreading it across more companies and watching what you do with it before we give you more. And so your responsibility now at this range, in this age, is to demonstrate that you can get early customers and early revenue yourself before venture capitalists like us are willing to invest in your future. So what I'm about ready to take you through is our bespoke market acceleration program that we use for the companies that we write checks for. So you actually apply for investment. Once you apply for investment, then you apply for the accelerator. So after we write you a check, you can then apply to be a part of our accelerator program. And we only accelerate 6 to 8 companies a year. We only make about 15 investments a year. But we spend anywhere from 3 months to 2 years helping that company grow and find their definition of product market fit, which in my view is when you can't keep up with the demand based on the resources that you have, that's when you found it. And now we share that with the world. So we license it to some of the big brands, accelerators, and governments and corporations and organizations that support entrepreneurs around the world. So there are 3 objectives to the market acceleration framework. The first is to find the truth about where your product fits in the market, if it does at all, and what to do about it. The second is to create a functional learning organization out of the team responsible for pursuing that truth. And then the third is to determine whether or not profitability could exist at scale. And so if you're not thinking about those 3 things and behaving in that manner as you're going through your own process, you're probably misallocating your resources in the wrong areas in the wrong way. So we have a milestone-driven approach, and I'm going to walk you through all 3 milestones. And you'll have access to this content if you go to growthx.com and you sign up for the hashtag GXMXP series. It's a series of blogs that take you through every step in the program, along with all the tools and the documents and the resources associated with it. Milestone 1 is what we call our market foundation and discovery phase. It has, just like every step, three actions. The first is a goal. The goal is to create a roadmap of the people, process, technologies, and resources required to support your first market-based milestone. Not a product milestone, but a market milestone. It behaves very similar to a product milestone, but it's a quantifiable milestone for you and the team to get behind to say that I need this number of wins defined in this way over this period of time in order to stay on the field long enough to learn where my product fits in the market. You have to come back down from the high horse of that big vision of your total addressable market and your service addressable market, and if I do this over this period of time, I'm worth this much money. Back to the pebble in your shoe. Where are you going to get your first customer? And what resources are you going to use to do that? And how does that look? And how do you allocate your time across those things? Once you do that, you get into the focus areas. And the focus areas are the systematic action items that are associated with achieving that goal. So the first thing we do is we map those resources and we plan. What resources do we have today to execute against a market milestone we're going to set that's achievable? What trigger events are going to compel us to need additional things? For example, what happens when you get your first customer? How are you going to onboard, implement, retain, and grow that customer? The second thing we want to understand is how you're currently attracting and acquiring customers, because that'll help us inform us about how those resources are going to get allocated, because we all have limited time, money, and resources and expertise to do this. And then ultimately, how are you tracking it if you're doing anything at all? And then out of that, you actually have a document that's a roadmap that says this is all of my resources today in the form of money, in the form of time, in the form of expertise, allocated towards either product or market. There's individual owners of either side, and then how do they interact together so that you learn quickly and you rapidly iterate and solve a real problem, not build a product, because no one cares about your product. They care about their problem and whether or not you can solve it. In fact, your product is simply a byproduct of that experience. And you've got to get your head around that if you want to find product market fit. The second element is to understand who what we call your initial customer profile might be. It's like finding Mr. Right now versus Mr. Right. There's a psychology of a certain kind of person that's willing to give you the time and tell you the truth about your product, their problem, and whether or not you can solve it and create value at this stage of your company. Because this entire system is designed simply to help you learn. And it's a human-to-human interaction. And many of us will ask the question, does this work for B2C? Does it work for B2B? Does it work for marketplaces or B2B2C? Does it work for hardware, software, widgets, services? The answer is yes, because it's about the stage of your product. It's not about the stage of your company or the kind of product that you're taking to the market. It's all designed to take something someplace new, whether that's a new product to an existing market, a new product to a new market, or an existing product to a new market. In all cases, this is a learning methodology that's designed to help you find that truth. So we want to understand who that early customer is, what resources are allocated towards it. We want to understand how you might charge for that, what the business and pricing models might look like. And so we go through a whole series of steps, from current account mapping and pipeline review, developing initial customer profiles, prioritizing your resources in your pipeline to support that, reviewing your current customer experience. How many of us ask ourselves every day, how easy or hard do I make it for people to do business with me? What do I ask them to do? What are they thinking about that, and how do they feel about that? How do I want to price versus what should I charge? There's really only two elements to pricing. There's headcount-based pricing, and there's non-headcount-based pricing. And if you're offering up pricing too early in the process, you don't truly understand the need. So the outcomes of this phase of milestone 1 is a roadmap that tells me who your customer is right now, how you're going to find them, how you're going to prioritize your resources against it, what your first market milestone might be, and what your potential cost to acquire a customer might be versus the customer lifetime value. So at the end of milestone 1, you should have answers to these questions. What resources do you need to test and validate your idea in the marketplace? Who your ideal initial customer profile might be? How to prioritize your time to support that? Where to find these folks? What your proposed pricing and business model might be associated with it? What channels you use to reach out to them? What market milestone you're aiming for? And how you're going to acquire them. Now that you understand this, it's time to go to milestone 2, which is designed simply to do one thing. That is to get people to talk back to you, to generate an honest response from the market. Whether you like that response or not is entirely up to you. And it's okay to pivot, right? 50% of successful seed stage funded companies pivot at least once, a third pivot at least twice. It's not uncommon. So market messaging and outreach is designed with a simple goal, to develop a comprehensive map of all the different ways you might talk to the market about what you're doing and what you're seeking from them. And this is an area where I see most companies get stuck. Just because you speak the same language, well, you may not speak the same language as me, I'm sorry. Just because I speak English doesn't mean we speak the same language of business. So there's a product and market and industry and sector-focused taxonomy associated with what you're doing. How are you talking to the market in a way that gets them to tell you the truth? So the first thing that we do is we want to interview your current customers, prospects, or your prospective initial customer profiles. And we don't want you to do it. We want somebody who knows how to conduct an interview to do it, because you're biased. And number one. And number two, you're probably not an expert at constructing a feedback session that would actually get people to tell you the truth. Then out of that, we develop unique selling propositions and value propositions, and there's a difference between the two. A selling proposition tells me what you do, but a value prop tells me what you do for me, and that's what I care about. And most of us lead with selling props and bury value props. A value prop has to be quantifiable, measurable, and it needs to be what you lead with in your messaging versus what you follow with. As I mentioned, no one cares about the product yet. The last thing you do is demo, not the first. Then out of that, we develop an initial attraction framework, and we create a conversational framework. What do you do when you get the meeting? What happens when somebody says, ooh, that's interesting, tell me more? How many of us have ever been taught to run a meeting? How do you determine what you're looking for, whether or not these people are a fit for you right now, and whether or not you should continue to pursue them? Because what you don't want is to spend 6 months on a deal that's never going to happen. No is the second best answer at this stage. And the sooner you get to that, the better. Because again, you have limited time, money, and resources to learn. And half the battle is just staying on the field long enough to do that. Okay? So out of that, our goal is to build a initial messaging hypothesis for every relevant initial customer profile we want to test and know what channels we want to do that across, and a map that allows us to start to set up ourselves for campaigns so that we can actually go to the market with something that makes sense. And then we want to build and define a sales funnel and the stages associated with it, and then we want to put something in place that allows us to track all the outbound activity and all the inbound activity. And we don't do this at scale. We do it in small drips because you don't want leaky plumbing. You want to test it to make sure it works, and then you constantly update from there. Okay? Then, out of that, we come up with the tools necessary to support our functional learning and measure it in a way that allows us to go iterate. So, the goal, once again, is to have a portfolio of all the assets you need to be able to start having that interaction with people, and then you create a closed feedback loop. So, at the end of this stage, you're at the end of milestone 2. These are the questions that you should have answered. How to talk to the market in a way that generates honest, open feedback. How to attract and qualify the right kinds of initial customer profiles. What your unique value hypothesis and selling hypothesis is. How to learn from people in a very rapid and iterative way. How to build a message map, a portfolio of assets associated with it, and then create that closed feedback loop system. So now that we've got a functional learning organization, I hope, in place, and we're out there trying to pursue the truth, in milestone 3, it's all about driving those results and iterating on every step in milestone 1 and 2 in real time. So you want to measure and track that market response, To optimize messaging, outreach, and conversion, you want to be able to validate and document everything that's working. You're looking for patterns. Every time you find something that is repeatable and predictable and scalable with a certain customer profile across a certain channel, you document that, and then you move on to the next thing. And it's not always sequential. It's dynamic because the market decides, not you, when and how you're going to learn those things. Then we get focused on a strategic opportunity and pipeline management function where every day we're looking at the deals at the bottom of our pipeline that we can manage, and we're making sure that we keep it clean and it's with people that are properly qualified so that we're not spending our time in areas that are going to eat up our resources. Then we want to figure out how we're going to build a repeatable, scalable onboarding and implementation process for our customers. How do we get them on board? How do we make sure they're successful? How do we retain them and grow them? In SaaS, anyway, 90% of your future growth and revenue comes from your existing customers, not new ones. So it's really important to go deep with fewer customers early. As a 5-time founder, I can tell you the more I do this, the more time I spend with fewer customers on deeper, more valuable, meaningful problems. Because the hypothesis is that if I do it for them, there's a big enough market behind them and a referenceable story to go with it. And then I want to build a nurture and opportunity framework for everybody that isn't a fit now. You're going to talk to a lot of people. Just because you say no or they say no doesn't mean it's not no forever. It's no forever. It's just no right now. So how do you keep those people informed of your progress as you develop and grow and nurture them towards you when it's time to reach back out? And then most importantly, implement a product market feedback loop. Who owns the product in your organization? Who owns the market? And how often are you working together to build things that customers want, not what your vision dictates? And if you're working with product people that are difficult about this, you should probably go find someone else to work with because it doesn't end well. So the outcomes here is I want to have an optimized plan for messaging, outreach, and conversion. I want a validated hypothesis on who my initial customer profile is, how I'm going to find them, how I'm going to talk to them, what my CAC LTV ratio might look like at a unit economic level over time. I want to be able to now start building my recruitment and employment brand, because at this stage, in this era, in the innovation economy, there's very little distinction anymore between your product brand and your employment brand. If you don't treat your team well and you don't attract A players, you won't be in business very long. And then I want to document all this and build a market acceleration playbook. So the milestone 3, these are the key questions that you need to have answered. And this is when and how you know you've found fit. You need to know how to run a successful functional learning organization. You need to be able to measure, manage market response at scale. You need to know how to validate all the steps across all your milestones in search of those patterns. You need to know what messaging works for each use case, for each customer profile, across each channel, whether it's a Google ad, or it's an email, or it's a phone call, or it's a conference, or it's an elevator pitch, and have all the tools associated with supporting that. You need to know what your conversion rates are through every step in the funnel. The top of the funnel, if you just improve the top by 5%, it means a 20% increase in wins at the bottom of your funnel. That's why we spend so much time on initial customer profiling early. Conversion rates, how to scale outbound conversions for the team, what your employment brand is, and how to recruit what I call stage-relevant talent. This is a really important point. It's not about someone's background, industry, or experience at this point. It's about their characteristics and attributes. Are they stage-relevant? Have they done 0 to 1? Have they taken something someplace new in the role or function that you're hiring for? Do they communicate well cross-functionally because they're going to wear a lot of hats? Do they know how to embrace ambiguity? Do they love to create? We're not looking for standardizers and optimizers at this point. We're looking for creators. The biggest mistake I see startups make is they hire an industry-focused senior sales professional that has relationships. They give them a big salary and a bunch of benefits and PTO. And then they spend 6 to 18 months sucking all the resources dry, and they're not successful, and everybody's frustrated. So make sure that you hire stage-relevant talent. And if you're a product-focused founder, you should be the one doing the learning curve first before you hire anybody else to do it, or you have a co-founder that has equal power and influence in your organization that does all of your market development. And then now you need to build a way to support repeatable, predictable growth. So at this point, now you should be able to justify why you need to raise money from somebody like me. Make sense? Okay. All right. So the next question I always get is, how long does this take? I don't know. I don't know what I know about you. I don't know anything about your market. I don't know anything about your product. I don't know how the market's going to respond. I don't know about your resources. I don't know the dynamics associated with that. There's a whole host of things I don't know. The one thing I do know is that I don't know. But I do know how to find out. So there are companies that go through our accelerator program in 6 months, and there are some that are still in it 2.5 years later. Because we're actually working alongside them, helping them grow. This isn't about access to mentors and teaching you how to build a pitch deck and giving you access to investors. That's important, that's fine, it's necessary, but it's not enough. In 50 years of seed stage funding in the Valley, the failure rate has not changed. And in the age of applied technology, there's even more noise than there's ever been. Most of us don't have things that are defensible. Most of us don't have things that only we have. If you don't have a monopoly, you're gonna have to find product market fit at some point. And you need to do it in the most capitally efficient way possible. The whole idea here is just to help you get there faster. Okay? So that's it for me. Thank you guys. Traction is what we're all about. I appreciate it. As I said, if you go to growthx.com, sign up for the newsletter, you'll get all this content directly from the website.
Thank you very much. Thank you for the big round of applause. Let's have another one. That was a great presentation. So we have a couple of questions from the audience, and hopefully you find yourselves among these questions. Let's see, the first one. As we are in a pre-beta testing, while our B2B channel can have LCV 10 years, our B2B channel has LCV less than a year. How can we mitigate this risk?
I'm not sure I understand the question.
So we can...
All right. So the lifetime customer value is 10 years versus a lifetime in the B2B channel.
Less than a year. How can we mitigate the risk?
Well, you got to test both things, and you've literally got to do the math. Like, what's it cost you to acquire a customer? How long does it take? And then you decide where and how you want to scale. In my view, based on data. So what's the fastest path to traction? The least amount of time, money, and resources required to get to your market milestone with the most learning in return is going to give you your answer.
Okay, so data is the key.
Always, yeah.
Great. What are the top 3 issues you stumble upon when implementing this growth framework? Are they the same around the world, or does location influence the barriers?
Well, it depends what your goal. So I don't think about geography, and the reason I don't think about geography is everybody has a different definition of what success looks like for them. You don't need to get sucked into the romance of the Valley and think that you have to do things the way things are done there to be successful. If you can provide for yourself and your family and your community in a positive way, in my view, that's a win. And you don't need venture to do that. I spend half my time telling people not to chase it. You have to decide early if you have a venture-capable business. As a venture capitalist, we have a business model that we have to support. And that means we have to deliver a certain kind of return to our investors. And if you're raising money from us, you need to understand what that is and how you're going to contribute to that. And it's no different than when you're going out to your customers in a business-to-business environment. You need to understand how you're going to contribute to their business model. How are you going to get them to meet their goals? So geographically, it's not as important. But the big things that I always see are, number one, it's resources. Well, no, it's not resources. Number one's mindset. Do you actually really want the truth, or do you just want confirmation? Are you looking for information or confirmation? And so if you have the right kind of mindset that you pursue the truth and you care about solving a problem really well in a big market, fantastic. The second is the resources. Do you have enough? And are they allocated in the right way? 8 of the top 10 reasons startups fail have to do with markets and people, not products. So are you behaving in the correct manner? That's the second thing. And then I think the third is the inability to learn quickly and actually adjust based on that. So that's the functional learning element. Like I said, there's 3 objectives to the way we do things, right? It's about finding the truth, it's about learning quickly, and it's about determining whether or not profitability exists at scale to support the venture model. It doesn't mean you have to be some scalable product, business, or service, but that's our model.
Okay, so that's your vision and your side of the table, right?
Yeah.
Okay. So, do you define ICPs for a long-term vision standpoint or from an immediate growth perspective?
Good question. So when you're raising money, you talk about the vision. But when you're going to market, you deal with your reality. And that's why we call it an initial customer profile. It's about where do you go first and who do you start with. And it's not always about the geographic or the demographic, but it's as much about the psychology. Early adopters and innovators, people who are willing to take a risk with you. They share your vision, they understand your reality, and they're ready to go on the journey with you. So you don't sell to those people, you recruit them. It's a very different mindset and approach.
So, and how often do you redefine these ICPs or completely redefine them?
I don't know.
Okay, that's
no, honest. No, so again, it's an adult diaper question. It depends. The market will tell you that. You should constantly be updating it based on what you learn. You have the right to be smarter tomorrow than you are today based on what you learn. It's okay to make those changes. The framework gives you the ability to learn. You are not just a CEO, you're a CLO. You're the Chief Learning Officer of your organization. You have to be learning. We live in an innovation economy now. Markets move with minds, just like that. And if you don't own a use case, if you don't own the customer's thoughts and actions associated with that use case, and you don't own the relationship and then define value and deliver it, you're not going to be around very long. I wrote an article called Lasting Mover Advantage. It was all about sort of the history of the Valley and how all the big, most valuable companies weren't first to market at all. But what did they have in common? Those are the things they did well. They clearly defined a use case, right? Everybody talks about Amazon's the most valuable company and they don't make anything. Except all of us happy, that's a meaningful thing. In the experience economy, that's important. They understand the use case, which is, I want an easy button. If I want something, I want it now, right? That's their use case.
Okay, so hopefully with this information, everyone here will be able to stay longer on the market and also grow. Thank you very much.
Thank you.